Hey traders, welcome to Top Tier Outlook for Sunday the 28th or the week of the 29th. Great to see everybody. Thanks for taking a break from, I guess, what seems to be a fairly, unless you're a Chiefs fan, in which case, it's a good game, but what a sloppy, ugly game it seems is wrapping up in Baltimore. I haven't watched the last hour, so I'm guessing Baltimore's still losing. Sorry, Ravens fans. So yeah, wow. All right. I don't know what the score is right now, but I imagine everyone's watching that. But we're gonna get ready for this week's price action, and I'm in the middle of a lot of construction here in the office, and so sorry about the odd lighting. It's very mysterious back there, isn't it? I promise you, the bookcase is sitting back there as usual. All right, so let's get to it. The bell has rung in Asia, and we're beginning the week. And, as we take a look at the open, I'm going to show you a little something we do in the mastery every morning. And that is, I take this manually drawn line, a PSC, previous session close, and I move it to, well, the close. The close on Friday was 49.12 and 3/4. So what I'm going to do is just move this manually over to 49.12 and 3/4. And opening below that level is very much a bearish hemisphere, as I like to call it. So if you're thinking about the three main things I look for, we talk about this in Charts and Coffee. We talk about this in the Sector Secrets Mastery. As I move the NASDAQ to 17,504 and 3/4, I'm going to move that down right now. What this is a sentiment line, right? If you want to call this anything, this is sentiment. Previous session close is sentiment. That's your most steady level from which you can say bullish or bearish, right? And remember, that's before we even get to what to buy, when to buy, what price to buy, when to get out, where's to stop. Before we even get to that point, we want to know if we're just simply bullish or bearish. Unless I have a very clear reason to be bullish or bearish, there's almost no reason to be doing anything in that symbol. And that's something that we have to talk about a lot as traders. Are we bullish? Are we bearish? Until we're clear on that, there is absolutely nothing to do. So as I look at this daily time frame, being below the previous session close is sentiment. Now, as I start my day trading tomorrow morning, maybe it's pre-market, maybe it's after the bell, I'm still going to look to see whether or not the NASDAQ is below 17,504 and 3/4. If the 5-minute time frame, being a day trader for that time frame, if that time frame is in a downtrend, that's an easy choice, right? I mean, if a 5-minute chart is in a downtrend, if the structure is bearish, then that's easy. It's downtrend, short sells, long puts only. But if it's neutral, having that sentiment is so important. So sentiment is number one, followed by trend. What is the trend? Right? We have an uptrend on the NASDAQ daily. But we actually have a downtrend on the NASDAQ 5-minute. I'm going to move this clock over so we can all see it. I actually have a downtrend on the NASDAQ 5-minute. So you might say, okay, Rog, if you have a downtrend, what do? It's shorts only. It's long puts only, right? And if we're in a downtrend and we're below the previous session close, that's really easy. I want to be a short seller. I want to be buying long puts. And so you might ask, okay, where does momentum fall in that? It's frankly the least important. Momentum is the most sensitive or twitchy of the three. Sentiment's number one, trend is number two, momentum is three. And the reason momentum gets relegated to the third spot is momentum are early signs, just signs or cues of things that could happen. Trend and sentiment is what is happening. Momentum is what could happen. So I would like to know where the possibility is, but it's a distant third in terms of importance. Traders who tend to emphasize momentum are going to find themselves in very short-term trades, which is fine, or they're going to find themselves buying at highs only to see momentum wane, or shorting at lows. So it's really, really, really tricky in that regard. So focus on sentiment first, then trend. That is what is. And then you go to the third, which is what could be. And that's exactly what I'm going to do on the open. Let's go take a look at bonds in the same light. Got a lot of Chiefs fans in here now. Oh, it's 17-10. Did Baltimore decide it's a good time to score yet? What a crazy game. Like I said, I haven't been watching it at all. I'll pull it up on my for whatever reason, I will pull sports up on my Twitter feed. Yeah, there's 2 minutes left. Oh, it's 17-10. Wow. Okay, there you go. Um anyway, uh gosh. So if we're looking then at the bond market, a lot of folks have been asking me, Rog, is there anything that the bond market is telling you that would concern you? And I will say no. And the reason I say no is right now, I would say that bonds are stuck in a range below the 200. So it's a little bit in the bearish hemisphere. It's a neutral trend, really important, but bearish momentum. And I can see that both with the top row of this study at the bottom of my chart, as well as with the red grab candles. So a little bit near-term bearishness, but within an overall neutral environment. And this had to happen. If you think about when the sell-off came and when things got a little bit bearish for bonds, it was the week before last when the expectation for rate cuts in March pretty much were erased, or better put, got neck and neck with a hold. So before it was an overwhelming expectation that the Federal Reserve, the FOMC, would cut by 25 basis points or a quarter point at the March meeting. Nothing is expected in January. In fact, the only thing that's really expected in January is maybe a hint at what they're thinking in March. So this meeting could be a volatile one, not because there's going to be a decision on rates, but because it could have some foreshadowing to what they're thinking at least. They won't paint themselves into a corner, but there might be hints in the statement or in the presser. And I look at bonds, they're waiting on something. They had to reflect higher yields by moving lower, but at the same time, they're not continuing to punch down to lower lows because we're still expecting rate cuts in May. So no, bonds are not in any way sounding an alarm. They are, a lot of folks have asked me, okay, then Rob, what are they doing? They were in an uptrend from about the 24th of November to the 8th of January. Pretty good uptrend. The most significant thing is it did break the 200, but now it's oversold because they were in a neutral environment since you can see here the 8th, the 9th of this month, and therefore an overbought, oversold type indicator like the slow stochastic would be the best way to go. We are oversold. Now, if you take a look at notes, it's a little different. You take a look at notes, the ZN, we're still above the 200. So maybe one thing we could think about is, where are we looking? Do we have to look at the long bond, or could we instead look at the 10-year? And I think it might behoove us to look at the 10-year because the structure is still above the 200. It too is neutral. It too is oversold. But rather than being in the bearish hemisphere, notes are still clinging to the equator, right? And I do like that a lot. That's worth keeping an eye on. One of the positions that we're in right now in last week's video, I should say Friday. In Friday's video, I talked about the open positions that we have in the Sector Secrets Mastery, because let's face it, we want to talk about trades we're in, why we're in it, and trades I'm going to be looking at. I really, as a general rule, like to talk about things we've done, things we're doing, and things we're going to do, because, well, that's why you tune in. We want to talk about trading. And even now, as we're testing some new indicators that we are going to unveil in about, I think, 8 weeks. We're in the very last stage of testing. We'll be at about 1 year of testing. At this point, we're about 10 months in. And in about 8 weeks, we're going to unveil probably the most significant change I've made to my basic foundational indicators since I began trading. So many things have happened most especially in the last 5 years, that have changed the way I look at market structure. And I wouldn't have had to do this 10 years ago. I barely had to make adjustments 5 years ago. But there are certain trends that are happening, that trends in market mannerisms and in technology, they're forcing my hand because, frankly, gang, the only reason I'm ever going to go back to the drawing board and rebuild something is because I know my results aren't what I'm used to, right? When your results start to deviate from their normal output, you know that something's not working. So I'm not going to go back and say, oh, nothing works, but I go back to find why. And I think a lot of you probably know what's been going on. And a lot of it is the way in which 0 days to expiration options have changed the way behavior has become very short term. So intense, we have these very intense um, 0 days to expiration, attention, volume, action, and that's changing the way price action moves. And then we also are seeing other things, whether that be algorithms and all these things that sound so scary, but they're really just different ways that volume and price are moving trends and momentum and reaction to price differently than when I was looking at this stuff in 1989, 1992, 1997, 2001, right? So those are things that I'm sure many of you are seeing, as am I. So that's why some things look markedly different on my chart, and that's how we're adapting. And with this, we've seen some significant improvements in levels and in entries. And that's what I'm looking for. I mean, you might say, Rog, after 12 months, if you said, gosh, this really isn't working the way I want, would you abandon it? Gosh, if you ask the Lorna bot, she'll tell you for every indicator that we finally say it's worth putting on the screen, and that's usually 12 months or longer later, there's probably another 7 or 8 that never, ever, ever make it past, say, the 3 to 6 month mark. So you got to be willing to let things go and say, nope, it's not a needle mover. So that's what's happening. And congrats, Chiefs fans. Looks like y'all are heading to the Super Bowl. Hey, champs play well in January, right? Who cares what the Ravens did all year? Although fantastic year for them. Champs play well in January. I can respect that. You bring it when it matters. Yeah, that's a bummer though. I spent a lot of summers in Baltimore, in Towson actually. So I got quite a bit of family still there. So bummer about that. All right. But by the way, F1 season's right around the corner. So I've been enjoying that so much more. And they're going into testing. So that's going to be great. All right. Luch and Jackpot. Thanks for recommending the book, Reminiscence of a Stock Operator. Last week, I'm on chapter 10. It's a classic. Yeah, there's a bunch of books that are very much classics, and I would definitely say that is one of them. And what I love about it is the wisdom has nothing to do. You know what I love about that? It has nothing to do with systems and algos and hedge funds and television and Twitter, right? And yet it still applies. Isn't that so cool? I mean, technology, that was a time of boiler rooms and things of that nature. And here we are talking about the book in a completely different technological environment. And yeah, unreal. I'm glad you're enjoying it. That's awesome. All right. So let's see what else we've got here. Moving on. Italo asks, who's my favorite? Oh, well, current. Yeah, I'm a Verstappen fan. I like watching them race. They're all fun to watch. I should say I'm actually more of a, I think for me, and I think a lot of people are doing this now, is they're following principles, right? I think a lot of folks are just fans of certain team principles. But yeah, those are both great. Yeah, Schumacher or Senna. Oh, they're both legends. Yeah, they're both legends. All right. So what else? We have a long position in JP Morgan. We've had long position in Bank of America, long position in gold. And if you want to check out what we're in, and actually at the end of, what is today, the 28th? So probably next week, we're coming back. A lot of folks will say, hey, Rog, where's the trades vid? TradesViz been? It hasn't gone anywhere. We'll be doing some TradesViz recaps of the trades we've taken in the mastery and how the account is growing. Starting again, we'll every end of every month we'll start doing those recaps again. So, yeah, absolutely. I think I just got a little lazy about recording the video, to be quite frank. I'm usually on the mic about I don't know, 13 hours a week. So I think I just kind of got a little lazy about it, but I do want to bring that back because I love the idea of looking at all the trades we take in the mastery and what the account growth is, right? And I don't mean dollars or I don't mean dollars and points are not unimportant, but I want to show you all how the account is growing, right? This is what I started with Gen 1 and where is that account as we go into February. So I'll be showing you all that stuff. I'm looking forward to it. I think TradesViz is an amazing platform. And if you are looking for some sort of software to use to track your trading and study your trading and pick apart your trading and find where those weak spots are, TradesViz, TradesFviz, TradesViz. And I don't work with these people. I pay for this service like anybody else. I just really like their service. And actually, it was a member of the Sector Secrets Mastery that recommended it. Yeah. All right. So what else we have here? I've been looking at, Bot and I were going back and forth about crude oil on Friday, and we both decided to tap the brakes on it because we were thinking, hey, could this thing be something we would short? And we both agreed, no, we don't want to short it. Take a look at what it did. This is why we did not short it. Look at what it was able to do on Friday. We got into the bullish hemisphere. That's a big deal, gang. Crossing that equator is a big deal. So yeah, it might pull back. It's getting overbought. It is in a neutral environment. But if you're not looking at the simpler propulsion, if you're not looking at the way in which crossing that level makes a difference, please start thinking about that, because the follow through, and I mean, look how we gapped up, right? I don't need to be caught up, and even if it's only about a 70-cent gap, but I don't even need to be caught up in that, because crossing that threshold is a big deal and does tend to trigger a little bit more bullishness. So Bot and I thought, you know what? We'll just tap the brakes and we'll see, maybe there's a long position to be had as we go forward. And it's looking like there could be, we could start thinking about buying daily price movement range pullbacks as it climbs higher. So this is why waiting for the criteria, focusing on that sentiment is so important. Sentiment is what kept me out of the trade, and sentiment and trend will likely what gets us in and probably long. Yeah. So pretty cool. All right. So it looks like we're off to game number 2. And I know I'm actually kind of, I don't know why I'm kind of doing this underdog thing. I was kind of rooting for the Ravens, although that's a little bit of my family in Towson and underdogs for the next game. Yeah, are the 49ers probably going to win? Probably. But I gotta root for the Lions, if for no other reason than the bug bought a little bit. Just to have something that her and I can we could argue about. All right, gang. As always, thank you so much. Thank you so much for being here for Top Tier Outlook. The newsletter will go out tomorrow. My Sector Secrets Mastery members. We're going to talk about the leading sectors right now, which sectors are leading the charge going into February. Where's the sector rotation bid? Is there even any meaningful sector rotation? So what's leading the charge into February? Where should our focus be? And how are we going to start to align our next group of trades? We've had a really nice run in January with the swings, and we're going to continue to look for those opportunities as we go into this post FOMC environment. So we will have a very, very big week, because not because the FOMC is going to say or do anything on Wednesday necessarily, but because, well, ultimately, are they going to drop any hints at how likely or unlikely, as it appears at the moment, they are going to wait till May to cut? All right, we are going to get cuts this year, gang. It's just a matter of when. All right, be good to each other, gang. Catch if you haven't already, catch a video over at the Simpler Trading YouTube channel. That was the, what was it called? Buying the Dip Still Works or whatever it was called. So I'll see you tomorrow for Shorts and Coffee. Be good to each other, gang.